Hello, I'm having a look at the 2019 ordinary level cash flow statement question, McCabe Limited. Cash flow statements are the most popular question on the ordinary level paper, with over 70% of the students attempting them, and they score quite highly in them as well. This is a typical profit and loss appropriation account that they use for these questions, starting off with operating profit of 135,000. That would be your sales less your cost of sales, getting you your gross profit, plus any other operating income and less all of your operating expenses. That will be all your expenses except for interest. So the firm's operating profit is 135,000, on which they paid 19,000 interest, giving us profit after interest of 116,000. And then the tax charge for this year is 25,000. That tax won't have been paid yet. What businesses do is this year they pay last year's tax. So that 25,000 euro tax hasn't been paid yet, and you'll see it turns up in our balance sheet as a current liability here, taxation 25,000 at the end of our year. So our profit after tax then is 91,000. We're giving our shareholders 26,000 in dividends, so the retained profits, the profits we've hung on to, are 65,000, and to which we're adding the profit we had left over since previous years of 122. So our closing P&L balance is 187. You can see it down here in our balance sheet. The closing P&L balance is 187,000. It was 122 last year. And then looking at our balance sheet, we've just got the one fixed asset, land and buildings. They were 780,000, they're now 930. So our land and buildings have gone up by 150,000. And in the absence of any other information, we can say that we've bought land and buildings worth 150,000 euro during the year. By the end of last year, 2017, our depreciation was 55,000, and now at the end of this year, 2018, it's 70,000. So therefore, we must have written off 15,000 euro worth of depreciation this year as an expense in our P&L. Stock has increased in value by 8,000. Our opening stock, which is always a cost in our trading account, was 70,000. Our closing stock, which we subtract from our cost in the trading account, was 78. So the overall effect of the increase in stock of 8,000 there has been to increase our profit by 8,000 as well. You should check that up yourself. Debtors have reduced from 40,000 to 29,000. That means we owe our debtors 11,000 euro less than we did last year. And our bank balance has increased from 10,000 to 15,000. Looking at our balance sheet, our trade creditors are 42,000. These are people that at the end of last year we owed 42,000 because we owed them that for goods we had bought from them on credit. And at the end of this year we owe them 35,000. So we've decreased our creditors by 7,000 euro during the year. That tax there, 29,000, was the tax due at the end of last year, and that would always be the tax that we paid this year. So this year we pay that off. The 25,000 euro appearing here now in our balance sheet at the end of 2018 is the 25,000 euro that we already took away from our profit in our profit and loss appropriation account up here. We've said that the tax for this year is 25,000 euro, and that's it here again. We just haven't paid it yet. At the end of last year, we owed our debenture holders 200,000 euro. Now we owe them 250,000. In the absence of any other information, we can assume that we borrowed a further 50,000 from them. And then looking at our shares, at the end of last year, we had issued 452,000 euro worth of shares. Now it's 470, so we must have sold an extra 18,000 shares. And we brought in not just 18,000, but an extra 15,000 as well, because we sold them at a premium. So the 18,000 euro brought in 18 plus 15, 33,000 euro. Now these cash flow statements, these questions have a common start and a common end. You're always going to start off with the operating profit. McCabe made €135,000 in operating profit, and we must try to work out how can you make €135,000 in operating profit and yet only increase your bank balance, your money, by 5,000. So we'll see in the start of our question, we'll start with that operating profit of 135,000, and we end up with, down here, that increase in cash of 5,000. So you know your starting point, the operating profit, and it's kind of comforting to know your ending point as well, the increase in cash of 5,000, which you're able to read off the original question by looking at the bank balance or the cash balance, or both. Was 10 and is now 15,000. Okay, so to the solution. 30 marks for doing a reconciliation between the operating profit and the net cash inflow. So let's have a look at that. We start off with our operating profit of €135,000. But we're going to add back the depreciation, because depreciation is an unusual expense. Although it does reduce our profit, we don't spend any money on it. And we're trying to find out how much money we generated from our trading and profit and loss account. So if depreciation didn't involve spending any money, and if our operating profit is 135,000, we're going to add the depreciation back to it. You'll always be adding the depreciation written off during the year back to your operating profit in this reconciliation statement. We said also that we increased our stock during the year by 8,000. It's good to remember that if you increase your stock, you'll also increase your profit by the same amount. But that increase in stock doesn't involve earning any money. So, although it has increased our profit by 8,000, and it's inside in that 135,000, we must cancel the 8,000 again, because it did not involve us earning any cash. So we're taking off the 8,000. We saw on our balance sheet that we decreased our debtors by €11,000. Remember that the debtors are the people who owe you money because you sold them goods on credit. So, you earn income from your sales. But if we've also decreased our debtors, it means that not only did we earn income from our sales, but our debtors paid us an extra 11,000 over and above the sales. That's why we're adding back 11,000 there. You always add back decreases in debtors. You'll subtract any increase in debtors. We also saw on our balance sheet that our trade creditors went down by 7,000. Your trade creditors are people to whom you owe money because you bought goods on credit. Now, if we decrease our creditors, it means that not only did we pay for all of those purchases, but we've also spent an extra 7,000. That's why we're subtracting the 7,000 decrease in creditors. And doing all of that then, we find that although we made an operating profit of 135,000, our trading and profit and loss account has actually brought us in €146,000. We're calling that a net cash inflow from operating activities of €146,000. So, if nothing else happened, we should be €146,000 better off. And that's the start of our cash flow statement. Subheading operating activities, and our net cash inflow from our operating activities is 146. That's far from the 5,000 that we met earlier. So we'll end up with the 5,000 down here. Look, the increase in cash of 5,000. In the ordinary level, you're always given the subheadings here for the cash flow statement. That isn't the case in the higher level, where you'll have to remember these headings for yourself. So the first line of our cash flow statement is the operating activities, and our net cash inflow is 146,000. Next subheading is return on investment and servicing of finance, and essentially that just boils down to how much interest did you pay. And we saw earlier in the P&L account that this firm paid €19,000 in interest. Then our taxation, the tax paid was 29,000. Be careful with that. It's not the taxation in our P&L appropriation account. That's this year's tax. We haven't paid that yet. The 29,000 there refers to the tax that we paid on last year's profit. We can see it in last year's balance sheet as a current liability. That tax there, the 29,000. So under the heading of taxation, we have tax paid 29,000. Next subheading is capital expenditure and financial investment, and in the ordinary level there, that's simply the purchase of land and buildings. And we saw we saw earlier that we spent 150,000 on buying land and buildings, so that's a minus 150 there. We also saw that we paid €26,000 in dividends, so that's an outflow. So when we take those 5 figures into consideration, we get what must be called net cash inflow before liquid resources and financing. Before we get to thinking about our capital employed, we've spent our cash outflow is 78,000. We already saw that we got 33,000 by selling shares, the 18,000 sold, plus the extra 15,000, that's 33. And we also saw that we borrowed 50,000 from our debenture holders. So our financing is €83,000 plus. So that means that we've ended up here with an increase in cash of €5,000, which is what we've been looking for. The final part of the solution is for 5 marks, and it's the reconciliation of net cash flow to movement in net debt, and we'll deal with that separately.